Hello, this is YourStockAlert.com here today to bring you a video chart of APRM, American Pacific Rim Commerce Group. The first thing we're going to do for this chart is identify lines of support and lines of resistance. We're going to start with the heaviest of support, which will be the lower support, and that can be found right here at 0.015. Next, we're going to find the most recent level of support, represented by the slightly thinner green line, and that level is going to be right here at 0.025. It's always good to have two lines of support just in case one breaks. We know roughly ballpark area where the stock will probably fall to. Okay, let's get rid of all that, and now let's look for lines of resistance, which is what everyone really wants to know. As you can see here, we have the thickest line of resistance right here at 0.06, which makes a lot of sense considering that level is also going to be a nearly 100% gain area from here. So 0.06 is going to be the level to beat. We can beat 0.06, it's almost a clear shot directly to 0.09, which if looking at the 6-month chart, which you can't see here, would be the next level of resistance. Let's get rid of that. The next thing we're going to look to is volume. As we can see, we've had relatively low volume, though it has picked up a bit since September. However, what interests me the most is right here on this huge negative volume day. Usually with OTC stocks, huge negative volume days usually end in a strong downtrend or a long black candlestick, which with this particular chart, black candles would actually be red. An example of a long black candlestick, in fact you can see one right here, though usually they're still a bit longer than this actually. They'd probably be about twice the size of this candle. That's what you expect to see on a negative volume day. However, even though we did regress a bit from 0.06, it wasn't as harsh of a reaction as you would usually expect with an OTC, meaning that APRM can actually consolidate and trade normally and hold its own even after selling pressure hits, which is always good to know when trying to find more stable penny stocks. Next indicator we're going to look at is the ADX. If you've been following our videos, you know that an ADX above 20 signifies a trend. And as we can see, we have an ADX at 24.25. Looking at the positive DI, which represents bullishness in the stock, we can see that the positive DI is still technically above the negative DI, which means that the trend is more bullish than bearish. However, since this convergence right here is so close, it tells us that the stock is consolidating and looking for direction for its next move, which makes a lot of sense when we look at the actual trading activity. As we can see, lots and lots of consolidation. Now your team at YourStockAlert.com, taking into consideration this huge negative selling volume day and how the stock managed to consolidate rather nicely and even had a update today, gaining about 17% at the close, we believe that this next move is going to be upward as long as no negative news comes into the stock and the positive expectations of upcoming news happens on time. The reason we think this is because if the stock was going to break that positive uptrend and start a new downtrend, it would most likely have done so on this huge negative day as you see. But because the stock was able to hold its own pretty well, we think that given the right type of catalyst, the next move is going to at least attempt to be up. Now, judging that we have resistance at the 0.06 area, we're going to aim in the next run. We're not sure when it's going to happen, but we're going to aim for 0.06 as our ceiling. Now, if the 0.06 level can break, then it's a blue skies breakout all the way to about 0.09, which represents a gain a little over 200% from here. In conclusion, pick your entry and exit points before entering a trade, and please do your own due diligence. As always, use proper trade management. Good luck, traders.